Okay, now we're going to do the average cost method. And as I mentioned in the FIFO video, we do not have to go back and redetermine what our total purchases, purchase returns, purchase discounts, and freight are. If we use the gross method, if we're still using periodic and these facts remain the same, the transactions during the month remain the same, we can take these numbers and roll with them. So, of course, our entry begins with that part because that's typically the first piece that I do. Remember, of course, the sales entries would be at 110 and 130. And then we would have no cost of goods sold update at this time because we're waiting to do that all at 131 for my cost of goods sold entry. And I keep repeating that because honestly, on the exam, it really makes me sad when I see a student, I ask for a periodic method entry and they give me the perpetual entries or vice versa, because in those cases, it becomes nearly impossible for me to give partial credit of any kind, right? So make sure you know the difference between recording cost of goods sold under a perpetual and under a periodic method. All right, let's see. Here, we need to close out all of these accounts. So I'm going to make the same entries. I'm going to debit my two contra asset accounts, purchase discounts, purchase returns, and I am going to credit my two adjunct accounts, purchases and freight. And all those amounts, as I mentioned, remain the same, 15,950 for purchases, 880 for freight, my purchase discounts, 333.90, and my purchase returns are 740 in total. All right, now we do our established inventory balance we want. We're canceling out all our beginning inventory, and we're going to need to record cost of goods sold. All right. Now, how are we going to get, well, we know our beginning inventory. We know it's 200 units at $7 a unit, which is still $1,400. We need to establish our ending inventory. Remember, this again is by the physical count, 460 units counted. And because we're working under the average cost method, we want to take the average cost of all of the units, not just the units at a point during the month, like we did for the perpetual, but just one price for all units for the entire month. Right? So the way we're going to do that most easily is to calculate goods available for sale, GAFs, and divide it by the number of units available for sale, which means we have them or we purchase them and we did not return them. Right? Because remember, we're doing this at the end of the month for all units. So technically all the units that were available during the month, even if they were just purchased on January 29th, still go into this calculation. Now, the goods available for sale helps with the inventory equation. Gas is equal to my beginning inventory plus net purchases. And remember, net purchases is just going to be all of my adjunct account for the month, those two, subtract all of our contra assets for the month, those two. So I'm going to go ahead and calculate the net purchases from this. We have 15,950. That's an adjunct account. We're going to add 880. That's my other adjunct account. Then subtract 740, subtract 333.90. And in total, I have 15,756 and 10 cents. My beginning inventory was 1,400. It's the 200 units at $7 per unit. And this gives me goods available for sale, $17,156.10. So that's my numerator. And now we have to divide it by the number of units available for sale. Now, this isn't our ending inventory amount, right? Because we had 200 units to start. We added 1,100, but returned 70. So in net, I added 1,030. We bought 350, but returned 20. So I'm going in net, I'm going to add 330 units. And then finally, I'm going to add the 400 units. So that's 1,960 units after I do that math. And then just take the ratio of those two numbers. And I get $8.75 when I round to the nearest cent. And that's per unit. Now, it's best to give it a little bit of a sniff test and just say, now, does that kind of make sense given my price points? It seems to, right? Because we have a $7 price point here. We have 1,100 at 834, and that's a pretty big amount of units compared to the 200, the 350, and the 400. So, the average will be drawn a bit to this number. And then we have 923 and 1030. Even if we took a simple average of these, it would land, close-ish to my amount. But this does seem to at least pass the sniff test. Just make sure you're not like calculating, for example, $20 per unit when there's not one unit that's $20, right? Because then something went wrong. But yeah, so now we got our per unit price, and we know that there's 460 units in my ending inventory. So I just have to take the number of units that are in my ending inventory and multiply it by 875. That's going to give me my ending inventory amount that I want to establish in the account, 4,025. And remember, all we're doing here is eliminating the beginning balance and then establishing the balance I want. So the credit to my beginning inventory amount zeros it. I then determine the amount that I want as my ending inventory amount, and I debit the account appropriately to arrive there. Right? Perfectly reconciled. The only thing left then is the cost of goods sold. And we're going to need to calculate that either by just making equal the number of debits or credits. Honestly, the calculation that takes less time here is determining the total amount I sold over the month and then applying this per unit amount. Because of rounding error, you might not completely get this to equal, but that's okay, right? Rounding error is just rounding error. It's not a big deal. And I'm always looking at your work more than your final answer. So we sold 1,000 units and then we sold 500 units. So we have 1,500 units sold. And we're going to multiply that by the price per unit because the sold units are given the same price as the units remaining under average cost. And if I apply the 875, I come up with 13,125. This is going to be my cost of goods sold. You can verify that you get either that amount if you didn't round, or that you get something close to that amount by just determining what debit you needed in order to plug and make this work. But my ending inventory here is 4,025, and my cost of goods sold is 13,125 with my rounded calculations. In the next video, we're going to do the LIFO approach.